Although this video is called 4 ways to reduce inheritance tax, there are loads of ways, but I just can't fit them into a 2.5 minute video. And any longer than that, you're probably going to be asleep or searching YouTube to find ways to block me. I'm Nino Kafara, I'm a solicitor, and this is Talk Legal with Nino. Number one, and this is my favorite inheritance tax strategy, spend your money. I mean, you work for it, so go out and have fun. And given the outlook for growth is looking pretty bleak these days, you're actually helping the economy. How can you spend it? Well, on stuff that doesn't increase your net worth, like going on holiday and eating at expensive restaurants. Now, depending on how much you've got, getting through all that cash might take you some time, so you need to get started right away. If you want some great ideas on how to spend frivolously, watch Brewster's Millions. If you haven't seen Brewster's Millions, then your TV habits are probably worse than your tax planning. Number two is gifts. You can give £3,000 a year inheritance tax free, and you can give your children £5,000 a year when they get married. Although given the cost of weddings these days, that'll probably just cover the canapes. Other gifts above that value usually come with a caveat. You've got to live 7 years. If you don't, there'll be some tax to pay. You can make gifts into trusts, but be careful because some gifts attract a charge of 20% when the asset goes into trust, and then there's a 6% charge every 10 years. Take advice. There's a whole video on its own for that. I think I've done one. If I haven't, I might do one. I've definitely done a video on gifts out of normal income, and if you get those right, then the gift is immediately 100% inheritance tax free. Number three is business relief. Some shares attract 100% business relief, and you can make some investments that attract 100% relief after just 2 years. And it's really important that the money remains in the investment at the date of death, the date of your death. And some people misunderstand that point. So you need to get some financial advice because there might be some risks with those. Some farmers might qualify for agricultural property relief. I say some because the rules on agricultural property relief are changing, and some farmers now are changing the use of portions of their land and renting out units for storage. If that's you, you need to get some advice. Number four, don't die. Now, to be honest, this one's a pretty risky strategy. There's only one chap I'm aware of that came back from the dead, and he hasn't been seen for a couple of thousand years. So a slightly less risky strategy might be to consider a whole of life assurance policy. They're significantly more expensive than a regular life policy, and that's because they're guaranteed to pay something out when you die, which you will. If you're still watching, hit the thumbs up and don't forget to subscribe for more light-hearted videos on death and taxes.